All right, so November inflation is at 6%. It's a slight easing from October, but it's still on the upper end of the inflation targeting band.
Yeah, that's right, except that in Namibia we don't actually inflation target. You know, the primary mandate of our central bank here is not to target inflation or price stability, but rather to ensure that the currency peg remains stable, which is fine at the moment because our repo rate is slightly higher than yours in South Africa, 50 basis points higher. Right. That means that we don't have any risk of capital outflows really at the moment. But I think at least not for money going to seek greater return somewhere else at the moment.
Okay, but I don't want to be pedantic, but I think many people do consider a tacit inflation target because you track South Africa so very carefully. And so if your inflation is rising above even the rates that we're seeing in South Africa, it would be disconcerting.
Yes, certainly. At the same time, South African inflation is at 6% as well at the moment, so that's the top end of the band there. I was at the SAB a couple of weeks ago, and it doesn't appear that they're too worried about that at the moment. So I don't think that we're going to see a repo rate increase anytime soon.
The things that are having an impact on inflation continues to be food and fuel. Is that going to continue?
Yes, definitely. I mean, the fuel price increases I think we will continue to see for a while. The weakening rand against the US dollar makes it very, very likely that prices of pump prices of fuel anyway will increase. We have just seen a significant increase in diesel prices here, announced 2 days ago, I think it was. 54-cent increase per litre in diesel prices. That's very significant. We haven't seen a petrol price increase, but at the moment we're under recovering on our pump prices anyway, so I think that we'll definitely see a further increase in fuel prices. Obviously, then you have second round effects that take that increase in fuel prices through to your food prices. If you look at the prices of maize and so on the international markets this year have been significantly up on previous years. So yes, I think that we'll continue to see those aspects driving inflation in the future.
I mean, you mentioned that for the Reserve Bank of Namibia, the big issue is just to keep the currency stable. What would stability mean in the midst of the volatile markets we're seeing internationally that have a direct bearing on some of our currencies here?
Well, we have to maintain the currency peg with South Africa, essentially. The value of our currency would be extremely low if we didn't do that. At the moment, our economy is minute by comparison. It's very stable, progressing very satisfactorily, but at the same time, maintaining that currency peg is critical for us. South Africa is a big export partner of Namibia. So yeah, we really need to maintain that. So it's not really that interlinked to the rest of the world, but in our best interest, we have to maintain that currency peg. What happens to South Africa, unless it goes sort of very pear-shaped, which doesn't look likely, then I think that, you know, keeping that currency peg is our primary concern.
The tacit mandate of the Reserve Bank is growth. In an economy where you've got almost 50% unemployment, this is quite important. The decision to keep the repo rate unchanged speaks to that kind of wisdom, but there are other measures that are needed here. What are those measures?
Well, there are a number of other measures. The repo rate can only do so much. And I mean, if you look at the situation currently, our growth hasn't been fantastic. It certainly hasn't been terrible. 6.6%, I think it was last year. That's very decent. We're quite happy with that. However, we really need more. With, as you say, 50% unemployment, we really need to focus on encouraging more growth. The measures to do that are manifold. There's no single silver bullet to correcting that. We're currently working on the 4th National Development Plan in the country, and that one of the key focuses is growth, sustained high economic growth. We expect to make some progress towards that. Obviously, we're a country driven by a handful of industries at the moment. We've got mining, fishing, some tourism, some manufacturing, but really not enough.
Right.
So we're looking at new, clever ways to encourage growth long-term, as well as spur growth short-term to address some of the unemployment issues in the short term. Again, the long-term is just as important. So we're looking at a number of measures to deal with those issues outwith of the repo rate. And
Are authorities in Namibia concerned? Because obviously, I've just said repo rate kept unchanged. It's at about 6%. Interest rates are a little bit lower in South Africa. So for those looking for yield, it's probably better to come into South Africa. So there's the risk of capital outflows from Namibia. Is that something that's a bit of a concern?
No, I think you've got it the wrong way around there, because the repo rate in Namibia is higher. So funds will more likely to flow in this way if they're just looking for somewhere to invest their money.
Okay, and
no, it's not a concern.
And the Eurobond that you've issued at 500 million, it should help to bolster your reserves?
Yes, most certainly. I mean, just recently we've issued this Eurobond. It's a 5.5% coupon, quite a favorable coupon, and it's been received very well. The yield is down to about 5.25 or 5.3. So that shows that there's quite a healthy demand for it. It'll definitely help our reserve situation. At the moment, that money has been raised and is in the process of being spent. But for now, certainly we have a healthy reserve.